Good morning, Steve Freeman in Chicago with the morning grain comments. Well, it's USDA report day, so 11 o'clock will be a lot smarter than we are right now, at least as far as what the USDA thinks world grain supply and demand is. The market hasn't really expected big changes from the USDA. Obviously, U.S. corn, soybean, and wheat export numbers would suggest that they should decline or reduce the export numbers and raise the carryout. I think that's kind of in the market already. We are in a weather market more than anything else, and it's estimated that 39% of the U.S. soybean crop area is in drought, which is up 10%, and that 45% of the U.S. corn area is in drought. So obviously, crops here need a change in weather pattern, and I think that's what's going to happen. I think that we do have some rains forecasted next week across the Midwest, and then eventually over time we could see a little bit more frequent rains. Sunday's forecast will be really key, and just in case the dryness continues. Temperatures, though, in the current forecast are normal to below, which reduces stress on the crop. As far as globally, I doubt if the USDA does anything as far as making any big changes in wheat numbers, despite the fact that there is some concern about North America, Northern Europe, Russia, Ukraine, Kazakhstan, Canada, and maybe now Australia, weather outlooks and the impact it might have on the wheat crops. It's interesting that we have a rumor floating around that soybeans from the U.S. may be exported to Europe to be crushed and the oil re-exported back to the United States to satisfy increasing biodiesel demand. Now, this suggests that maybe the U.S. farmer is not selling enough beans, maybe the old crop situation is tight, or that the U.S. capacity of crush is being tested with the increase in biodiesel demand. So that has beans right now up about 5 cents. Soybean oil has rallied from a low on the end of May, 44.5 cents a pound, to the overnight high of 53 cents a pound. And I think a lot of that has to do with the outlook for higher demand for biodiesel. We also note that Argentina is talking about a 21 million ton soybean crop versus the USDA's 27. Corn sales down about 36% in commitment versus last year. Still, the July CEP spread has rallied back to 77 cents, which is a new high for the move. Contract high was made back in May of 2022 at $1 over. So we'll see if it tests that. And again, sales of wheat down 17% from last year. Wheat continues to be in a very volatile trading range. So we'll see what the USDA has to say. Watch for the weather forecast on Sunday and the reaction by the trade to the USDA numbers.